All right, welcome back to the Turnkey Property Pro podcast, the Investor Playbook. Market selection seems to be one of the most emotional parts of real estate investing for people. A lot of times people see these cities trending on like best places to invest list or hottest market in 2026, and they assume that like visibility means viability, but it really doesn't. So in this episode, we're going to talk about how markets actually get evaluated and why the investors who win long term almost never invest in markets that are making big headlines. So the best market strategy probably isn't the one everyone's talking about. So let's get into why that is. So Nate, when investors first start looking at markets, what are they usually focused on and what are they missing?
Well, it's a good question. I would say most investors, especially if we're new investors, actually don't know what they're looking for, right? They might come in and they might say something like, "I just want the best market with the best returns and the best everything, XYZ." So a lot of investors actually don't know what to look for in an investment market, but when we'll support them and educate them on that. I would say if someone is more seasoned at investing, and they're looking for the best or the brightest marketplace. A lot of investors are going to try to focus on extreme cash flow, right? Which isn't even a marketplace dynamic. That's usually a price to rent ratio dynamic, right? And so, short answer to your question is most investors really don't know what they're looking for in the right investment market. So.
So when we're looking at markets, then what actually matters? What fundamentals matter?
Yeah,
We're
yeah,
evaluating.
absolutely. So, uh, John will attest to this. We've boiled it down to some pretty basic stuff. This is to me, one of the most overthought, overanalyzed pieces in all of investment real estate is picking the right market. We are very big on who is watching our real estate and actually who's managing our real estate, right? Like I grew up in Bangor, Maine, not the most economically viable place to hold 1,000 rental properties, whatever it might be. But if you have the right property manager in that market, you can make pretty much most markets work, right? Now, if we're talking about some actual fundamentals, like from a macroeconomic standpoint, yeah, we're going to look at things like GMP, gross metro product, like what is the economics of that market producing, right? We're going to look at things like MSA, population density, right? Is there a million plus people there? I think our smallest, what we call a secondary market, has 700,000 people, but it's also 45 minutes from a huge metroplex, right? We're looking at cost of living. Is it below or above the national average? We're looking at rent to price ratio. We're looking at, percentage of renters in the city, and we're looking at, how many employers are in that city. Is there multiple sectors of employment? Is there, healthcare along with manufacturing, along with universities, right? So yes, there's macroeconomic data that we're looking at. There's also, we have very reliable partners in those markets that get micro for us. Our partners that help our investors buy real estate as well know what neighborhoods to buy in, what zip codes to buy in, what makes sense for the price of a property that will make income and have slight appreciation for you, right? So all the information, all the studying we've done for you. That's part of the turnkey process, right? We know where we like to choose. But the biggest piece for us is actually the partner in that market who's actually managing the property, right?
Yeah, absolutely. And to, just jump in and boil that down even more. I mean, obviously Nate and I have been doing this for, 17 years at this point in time. So, we've gone deep. And, when we originally started this a long, long time ago, we wanted to make sure we were measuring everything. And really the good part about us doing this for so long is, we've seen what is correct and what isn't correct in terms of what to measure, what to evaluate, and so on and so forth. So, for those of you who are listening that are trying to be as much of an action taker as possible, right? What are the one or two things that are three things that I can really look at and make a decision on? My recommendation would be one, focus on socioeconomic anchors, right? What are the driving factors supplying jobs in that city? Because without jobs, you're not going to have renters, right? And people are going to start moving out of that city. And are those driving jobs, are they, as economic proof as you can get, or are they more, sensitive to what other economic factors are going on, right? Is it tourist driven or is it
Hmm.
schooling and, medical and so on and so forth, right? So what is the industry and how strong is it? That's number one. Number two is our price to rent ratio, right? You could look at San Diego, and San Diego's got an amazing, super solid job force, companies, employers, super high average income per household, but the price to rent ratio is awful. Right. So those are the two factors we kind of cross-reference to say, is this a good market or not? Once that's all sorted, then as Nate stressed, it's all about the team. Because regardless of how good those two factors are, they can be perfect. If you don't have a team managing your properties and the portfolio the way that you want that done, and that's with care and common sense and speed of implementation, then it's going to be a grind, right? Regardless of how good those factors are. So for me, three things that we look at, we can just do it and move on.
I was going to say, John, you hit the nail on the head. It's price to rent ratio is huge, and people always, people talk about ROI and returns, right? Well, you're not going to have a strong cash on cash return or cap rate if you're investing in $500,000 single family homes, right? That's
Yeah,
a
exactly.
completely different strategy than buying, investment properties in the Midwest. So,
Yep.
Yeah, so it sounds like, we're looking for markets that aren't like on the next hottest thing, but just something that's not going to fall apart anytime soon, right? A nice, steady market. And you,
stable.
yeah. And you both touched on noting that like the property manager in those areas, the providers in those areas is as important, maybe if not more important than the market itself. Can you explain why like vetting a good operator matters more than a ranked list of the best cities to invest in?
Yeah.
Yeah.
What? Go ahead, John.
Oh, property management is not easy. It is not fun. It is not overly enjoyable, right? You have, from an investor standpoint, you have a human being living in your investment, right? And that human being is going to go through all the trial, error, and strife that you've gone through in your life, right? But that human being, you know, judges is kind of the judge and jury on your retirement account, right? So you need to have a property manager that understands that and can mitigate risk as well as possible for you because, no investment, especially real estate, is going to be risk free. Right. It's all about the mitigation of risk. Right. And, what does that mean? Well, instead of signing 1 year leases, we sign 2 year leases. Right. Um, Instead of running a maintenance call every single time someone calls you, it's taking 20 minutes to sit with the resident on the phone to see if they can unclog that toilet or replace that light bulb or change that air filter, right? So you're not paying $175 for every light bulb change, right? And it's having a really good system in place for when people don't pay, right? Do they wait around and say, oh, they'll get to it, or day three, we haven't received payment, you're not communication, we're going ahead and filing for eviction, right? And there are those small things that sound like, wow, we never even thought of it, or sound like, oh, isn't that common sense? But it's not, right? And those are the things that team has to have in place in order for you to be successful long term with owning real estate.
Yeah, and I'll add to that. I mean, from personal experience, John, I know this, we've had to let go of operators and partners, right? Like this comes from personal experience. Like we've done this for a long time and we've had experiences where for a long time an operator performed and then they didn't, right? And
Hmm.
so it's our job to keep the pulse on that for our investors and say, hey, if we start hearing issues with operators or property management or partners that aren't working, we need to come up with a solution and shift them and
Hmm.
shift to a new property
Yeah.
manager, whatever we can do to support, right? It's not this entire 15 years hasn't been rainbows and sunshines, right? We've had issues before, and that's just being transparent, right? People can perform really well for you, and sometimes things pop up, right? Do we have a good system in place and do we have, good partners in place now? Absolutely. Right. I mean,
Yeah.
the whole goal here is we work with very specific partners in our markets because we vetted them and we trust them, right? There's a
Yeah.
lot of options out there for you to invest in turnkey real estate. We know who we like, we know who we don't like, and we work with the people that we like. So,
Yeah, it's kind of funny to think, right? Like we didn't have Chat GPT whenever we were coming up with these SOPs for
Yeah.
management and market analysis, right? We had to, unfortunately, we're dating ourselves, right? Is learn it by trial and error, right? I mean,
Mhm.
that's how we came up with, oh, you glue a plastic tub underneath the sink in the kitchen because when residents don't report a leak, then you wind up replacing all the kitchen cabinets, right? We didn't do that because Chat GPT said, hey, this is a good idea. It was because we had to replace too many kitchen cabinets, right? So yeah, it's all trial and error to get us to this point after 17 years.
Yeah.
And it feels like that trial and error and the work you guys have put in to find those providers, right? That's really what changes the investor's experience and the risk that they take on, no matter what market they're in. It's really the provider that has
Yeah,
more to do with that than the markets we invest in. And the markets we invest in here at Turnkey Property Pros, you're not going to see them on any like hottest of lists
yeah,
ever, right? Like sexiest markets in the US or up and coming.
Yeah.
Why is that? Why do the markets that we invest in, why do they look boring?
boring is
Yeah,
better. We love
it
boring.
is.
Every
Yeah.
time I talk to an investor, I'm like, just so you know you've done well in investing if it becomes boring, right? It's because surprises and excitement in investing is not fun. That's just high risk, and that usually means something bad has happened. So, boring is key because with investments, we want consistency. Right. So like that's the hope, right? We don't want to see huge growth because huge growth prices us out of markets, right? We're not able to invest. Property taxes increase, right? So consistency, boring growth, boring wage increases, boring job installations, right? Like that's exciting because that allows us to continue to invest and continue to grow at a consistent rate. Because anything that does grow quick, anything that is not boring, anything that does adjust quickly, just remember those ups are
Oh,
also
yeah.
eventually matched with downs, right? You're like, oh, you got an 18% cash on cash return from an appreciation last year. Great. Well, whenever the market does take a turn at some point in the future, you will recapture that 18% with an 18% decrease. Just know, right? So, what goes up must come down. So boring is fun.
Yeah, I like the word vanilla too, which we want vanilla and predictable and boring. That's why you're not going to hear us talk about super high cash on cash all the time, right? Did anybody see what just happened to Bitcoin? It's like
Yeah.
it's wild.
Right.
Obviously, it's still up from when it was first, introduced to the market, but quite volatile, right? So yeah, we want predictable, stable, Midwest markets. That's where the majority of our markets are, right? That's where we like to invest. So, yeah, boring's good, predictable is good, stable is good.
Mhm.
And boring markets reward patience, right? So
Yeah.
that's what we're here
Yes.
for.
Yeah. Yep. This is not buy, hold, and sell in 5 years. This is like buy and hold for 15, 20 years, right? So,
So if somebody is going through this process of looking at different markets right now, trying to figure out where they want to invest in, what do you think is one thing they should maybe reconsider after listening to this episode?
you always have good ones. They make me think for sure. Um, what should they reconsider when basically looking at an investment market? That's your question.
Yeah, let's say they're right now they're looking at starting investing. They're like, oh, Austin, Texas. I just
Hmm.
Googled it and it's the hottest rental market in the US right now.
Yeah.
But my friends are telling me I should go look at Florida or Tennessee. What's for somebody who's in that space right now, what's one thing they should maybe reconsider about their where their head might be at right now?
Yeah. Well, I'll take it back to one of our previous episodes and say, well, what's the goal, right? First and foremost, what is your goal investment? Secondly, it's like something we haven't hit on yet. What's your budget, right? I mean, cool. Do you want to go invest in Austin, Texas, where your average purchase price is going to be, a 60 to $100,000 down payment? Or do you want to have some affordability, where, you can get into multiple doors, for the same amount of capital, right?
Yeah.
So, you know, it's a really good question. I think that I'd have to understand what the objective of the investor is first. But I guess if you're an investor who's considering the bright, shiny object, what's your objective, right? First and foremost, like because it's a good market and you feel like you might buy now and it might appreciate 20% over the next 5 years. Historically, is that accurate? Are you gonna do you want to educate yourself on that, right?
I mean, for me, it just goes back to I think what Nate had said is, what is the goal, right? It's because, you know, what's usually the hottest new thing usually doesn't line up with what your long-term goal is, right? Hot new things have a shelf life, right? They burn hot and then they burn out, right? Whereas if we're coming in with the intention of investing for 20 years, we don't want something that's the hot new thing. We want something that has been consistent, boring, as Nate said, vanilla for the last 20 years, and excited to keep it that way for the next 20 years, right? And a lot of these quote unquote hot markets are, as Nate said, more expensive, right? Like, what is your budget? And if you go to Austin today, I don't know, I'm going to guess the average price of a property is probably $400,000 to $500,000. That might even be low at the moment, right? Like, you're putting a lot of risk in one roof, right? Where you could spread risk across 3 or 4 roofs for the same amount of money, right? So, risk reduction and what's the overall goal are the 2 things that I would focus on if I was to have someone rethink where they were going to invest without really knowing what's going on.
Yeah. I think to kind of summarize what both you really said is really that like the market that's going to win for you as an investor probably isn't the one everyone's talking about, right? It's the one that matches your strategy. It has the fundamentals to hold up over time, and it has operators who can execute. And those are the things that really matter, not the hype around the market. And that boring beats exciting every time.
That's right.
Yeah. All right. Well, thank you again so much, Nate and John. This was a great conversation, and we look forward to seeing you on the next episode.
Yep.
Thanks,
Sounds
guys.
good.
Appreciate it.